This is the Iron Trader, and this is the weekend edition. Today, we're going to take a look here at seasonality charts, but with a twist. We're going to look at the actual seasonality chart, and then we're also going to look at a regular set of charts and see how it all compares. So the first chart we will look at will be crude oil, and then it'll be natural gas, and then gasoline, and then we're going to look at the Dow, the S&P, and the Nasdaq, and then we're going to take a look here at the VIX. And we're going to see how it all shakes out. Seasonality charts are usually like over a period of time, 20 years. And then we'll compare that to, like, say, on a yearly basis to see how everything shakes out. This video is for information purposes only. Not a recommendation to buy, sell any stock, commodity, ETF. Please like, subscribe. Thanks for watching. All right, here we have seasonality charts. Now, you can, look these up yourself here. Just go to equityclock.com and punch up charts, and you can get basically your seasonality here on any chart that you want. It's pretty simple. But I like taking a look at these just for, comparison on what is going on in today's time and what's going on over a period of a 20-year span here, okay? So right now here, we're just going to finish up January. So now when we look at crude oil, you're looking at where you could actually come down here a little ways, and that's basically what we're doing right now. We have a little sell-off going. But when you look at this chart here at the right around the, like I've been pointing out, really the first, second week of February, it's where you want to go long, okay? So you can see here where you're going to go long here in March. Yeah, you have a little bit of pullback, but you can see how the distance here is going all the way straight on up here. Then we get a little sideways action because this is basically, your July time frame. And then we'll come down in August, but then you're going to have a rally up here again because what this is hurricane season. Okay, now hurricane season, bad for people, but good for long oil and natural gas and gasoline, etc. So that's what we want to look at. Now, at the end of October, this is where I usually, I'll sell the long position here, and then I will go short all the way basically the first week of December, and then we just rally right on up here until really the first week of January, which is basically right out here. Now, every year is going to be a little bit different because, okay, like this year, there's a big conflict going on in the Red Sea here, and, with the Houthis and all that. So you have to factor all that in there. So nothing's going to be directly, but this gives you a good idea exactly what happens here. So again, we have that rally up here in January. It comes out a little bit here. And then February, it usually sells off. And then you want to go long because you want to be into that Memorial Day, okay? That's very, very key, the Memorial Day. And then we come up into the 4th of July. So this is all that nice summer driving period, okay? So then we have a little bit, it's kind of like a slacking, but your oil is still way up here. But again, you have to factor in what else is going on in the world. And then realistically, you want to buy this again or hold your position until the end of October. Then you can go either sell your position or, like I do, sell, and then you can go short till the first week of December. Because that hurricane season, it all depends on how bad it is. This can rally up very, very hard. So let's take a look here now on a crude chart of a daily. All right, here we have your daily chart of crude. Okay, so you can see where basically this is like a 1-year period. All right, so let's just see where we are realistically. At the end of December, you can see where it's sold down, just like on that seasonality chart. And then you can see where it rallied right on up here, basically here, okay, all the way on up. Now, this is a February deal, and now you're pulling back. So realistically, the first week of January, you can see where it pulled right on up. And then a sideways action, and we have a little bit of rally going on here. But now in February, you can see where it's pulling right back off again, okay? So this is the time right here where when you compare it, okay, this gives you a good idea of where you start rallying here, right in here to this summer driving, okay? And then right into the hurricane season. So when you take a good broad look at this, it's pretty close to what we have on your seasonality chart here. Now, the question is what we want to do is we want to see here where this is going to bottom so then we can take a long and then ride that long all the way into like Memorial Day weekend. Now, again, you have a big retest up here of 95.03. Don't know if it's going to get there, but again, it all depends on what kind of a circumstances you have where it very might well be. So let's take a look here like on a weekly chart. All right, here we have the weekly chart here, basically on a 1 year time frame. So you can see pretty much the same kind of a situation here, where once you start getting here after Memorial Day, then you can start seeing where you're going to start rallying right on up here. Okay, so here's that September area that I was telling you about. Okay, this is that hurricane season where you take it and it rides all the way up here just about to October, and then look what happens. See, so it comes all the way on down again. Now she's kind of flattening out a little bit here. We had a nice rally, and now you're getting that pullback into that mid-February kind of a situation. So when you look at that daily chart and you look at the weekly chart, you're pretty much, very, very close to the seasonality chart. Okay, so let's take a look here now on the natural gas. All right, here we have the natural gas seasonality chart. Now, you can see what's happening, and if you look at natural gas, it just fell right off the map. Okay, you're down in the very, very low 2 range. So this is basically why what happens is everybody thinks that all your natural gas is used in, for the heating and all this kind of stuff. It really isn't. Natural gas is really used, especially if you get a very hot summer, which we possibly could have because we had an El Nino for a winter. If that natural gas is real hot outside, what happens is you have to power all the power plants across the country. Okay, well, bottom line, coal, that's too dirty, can't use that. Nuclear, not in my backyard. But there's only so much you can do with the wind and the solar. Okay, right now you're about 18, 19%. But you can't really depend on it in different areas and different situations. Okay, so natural gas is really a clean burning energy, and there's so much, it's so plentiful in this country. Why we don't use it more, I just don't understand. So if you ever get a chance, just look up at T. Boone Pickens. Boone Pickens there, he had a really good idea of where he were talking about putting all semis on, all taxi cabs, all buses, everything out of natural gas. Because you go by any kind of a oil well, you see that fire going on. Well, basically what you're doing is you're flaring off the natural gas so the well doesn't explode. But right now, there's not enough pipelines in the country to get the natural gas to exactly where you want, okay? And another big problem I can see here, but this is all to do with the election. When Biden wants to get elected, he's trying to please everybody. He's trying to please the climate change people, where he's shutting off the LNG, where they convert the actual, gas into a liquid, and then they ship it out to the other countries. So really, you close down in 13 different pipelines. And you talk about it in Texas and Louisiana here. You ship it out in Pennsylvania and Ohio. You're shutting that down where that stuff could be going to like Germany and other countries. So if they can't get the natural gas that they want, what they're going to do is they're firing up, like Germany, they're firing up all these coal plants. So if you're looking at a climate change thing and you're all into climate change, okay, I get all that, okay? But if you're into that, it's a worldly thing. It's not just it's just going to be one certain country and all this kind of thing. So right now, if Germany switches to coal, I don't understand the reasoning behind that you can't get them nice, natural gas here to burn. You'd rather have them do the dirty coal situation. So again, I don't, understand how that's all gonna really shake out. And I know, like France, we're going to be firing up a bunch of nuclear plants. Clean energy kind of a situation there. So I don't understand the thinking behind it. And there's so much natural gas, is so plentiful that, you could really be doing a lot if you put all your buses and your semis and, any kind of the big transportation on the natural gas here. I know a lot of plants, they do they do the fork trucks and they do everything else like that. And it's really a good situation here where, you can use the fuel at a lot cheaper price. You see natural gas is down in the low 2s now. You don't have that big cost. But let's take a look here at the old chart. So what we have here in January, you can see where this is right down in a hole here, okay? So this doesn't look like it's going to do any better. Now you might have a little pop up, but you can see here where really February, March here, it's a big shoulder season here. There's really no demand for the product. But, if you start getting into these hot summers and that kind of a situation, then you can see where you're going to be rising right on up here. Now, this will rise up here like in the June time area here. And then what you do is you can come all the way down here like in July. But if you have a really hot summer, like say July, August, September, you can see what's happening, how natural gas can just rip much higher. Now, this is going into the colder season, but you always have to remember that once that November hits, that is ready overturned off into all the futures, and this comes flying right on down just like it has been here. So take a really good look at this if you're trading the natural gas. For me now, the trades have been really good because I'm just going long and short. I don't focus on one little thing. You know what I'm saying? Oh, I got to go long or I got to be short. You want to trade whatever direction that it's moving is basically, and just look at the support and resistance and trade direction. That's all we really do here. Okay, so basically what you want to do here is watch for these low situation, and then once we start getting here like the mid to end of March here, you have a good opportunity here to take a long position, and even you can hold here. You can see where you can hold that area and then run that right back into here until we get to the cold weather, and then always say, oh, it's going to go up higher. Just dump that situation or short it like what I do, and we can just make some money going all the way on down. So let's take a look here now on a natural gas chart. All right, here we have natural gas. This is a basically yearly, but it's a daily chart. All right, so we can basically see here, it's pretty much what it says on there, where you rally up here a little bit, and then you just basically have a nice steady, see how nice and steady that is rising? All the way up till you get to this area here, okay? So actually it's following the seasonality here really pretty good, and then you can see where it's coming on down, but now you're just falling right off the map here. So realistically, you watch that price channel at 2.03. If that's lost, you can come all the way down to this 1.94 here. That is going to be the next level here of support. So maybe what we'll do is like in the February area, it might come down to this level here, and then it might be a nice buying opportunity here where you can run it right back up on here for that seasonality trade. So let's take a look here on a weekly. Okay, you look at the weekly, pretty much the same kind of a situation. But realistically here, when it drives right on up, okay, you always got to make sure that here, see, there's that November time frame, okay? So when it comes up to that area, you can't be afraid to say, hey, I'm taking this right on off and I'm going to do this, I'm going to do that. Don't be afraid to say, hey, I'm going to sell this, I'm going to short this area and go on down. Let's just take this time frame out here a little bit. See, we got 1 year. Let's just take it out 2 years here and see what you have, okay? So you had a really, this is that June, July area, okay, where it rallied up there very, very nicely. And then you can see that it's been selling here ever since. Now, February, there's that bad time of the year again. And then we come all the way up here to June, July, because she had a pretty good rise. And now she's just selling, right on off here. Now, whether it's going to get right back up in this area here, yeah, who knows on that level. But right now, it just looks lower. And we got to see, there's such a glut of it. And what I don't like it, why I don't think is going to get back up here, if they shut that LNG off here and they keep that shut up, they're saying they're going to review it. Well, I think what they're doing is they're going to review this until 2 days after the election. And then all of a sudden they'll make a decision, when he's out of there, then I think they'll make a decision. Well, you know what I'm saying? So that's usually how politics going to work here. Okay, so let's take a look here now on the gasoline. Now, gasoline basically is one of my favorite trades. I trade the UGA. I'm going to punch that up here right after we get done here. It doesn't do much volume, but again, I don't, what I do is I just buy it and kind of hold it for that seasonality trade. So you can see where the gasoline is basically, here you're hanging on down, but then that gasoline senses that, hey, we're going to have that summer driving, and it's pretty much here all the way on up. And then when you do it, you can come down a little bit, but as that rises right up here, and then it kind of stays steady gasoline. So what I usually do is I'll take the run up from, your end of January here until basically June. Now, if I miss a little bit of this, that's really not that big of a deal. I usually try to catch as much I can of the gasoline. Now you can see once you start hitting that September, October, well, she falls right off the map here. And then December, for the holiday season, you get that little bit of a bump up there. But don't be afraid here to say, hey, I don't have to take the whole trade. You can say, oh, I'll take the end of January. And sometimes what I do is I'll hang it out till June. I got to look and see what the other chart is. Sometimes July. And then I just take the gasoline right on off because you already made your money. And there's other trades out there. So let's look at the UGA on a daily chart. Okay, here we have UGA. This is basically the gasoline ETF. Now you got to be a little bit cautious of this one because you can see here, if you look at the volume situation, what it really did was 46,000 shares. Okay, so that isn't really a whole lot. So when I buy this, you can't go there and say, hey, I'm going to buy 25, 50, 100,000 shares. You're not going to be able to get out of it, okay, and probably not even get into it. So I usually I keep the shares a lot smaller there, less than 10,000 shares, and then sell out a little bit there over time is how I like to do it. So here we have that yearly chart. So we're just basically here going to be running on up here. So you can see where on that it had that little pullback, but realistically, I just buy it and just hold this thing until I can get to this time frame here. So this is you're looking at your July here, and then see it trades out pretty much same as the seasonality. Okay, so once you start getting that Labor Day action right here, then you can see where the gasoline is just basically right off here. Now I don't short it. I try to run it up here until probably the July time frame, and then you can take a scalp from here and then go up here. But a lot of times I just let the trade go at that July time frame. But you can run it all the way to Labor Day with not a problem, So, but there's other stuff to trade. But if you look at the gasoline ETF, it follows pretty much that seasonality. Then it sells right on off. Now it's looking to sell right off here again. And then we could probably even get a retest here of 57. And then once we start getting here at the end of January, then you want to buy this again and just run this along here, either until July or even into Labor Day situation. Okay, let's take a look here at the Dow. All right, here we have the Dow Industrials. Okay, so basically here it's been going up here for quite a ways here. Now you're at nosebleed territory for the Dow, the S&P, and the Nasdaq. But now again, the Nasdaq there had some really good earnings. I stay away from Apple. I think their time is pretty much gone until they get some kind of a new thing. They got a car coming out here another year or two, maybe something on that order. Google is okay. The only thing I don't like about Google is I think Meta is eating its lunch. So a lot of this stuff here is pushing up, especially like your Nasdaq and your S&P here. So we got to just be very, very careful. So what we want to do here is look at the seasonality. So here we have the January. Then you can see we have a really nice January, kind of was a little bit of a down, and then it started rallying, especially. But this is where you got to watch it here. Okay, so you can still have a nice rally here until mid-February, but then then it's going to come down here like it usually does. So what you want to do is watch that March time frame, and then that's going to be a nice like a buying opportunity where you can actually keep running this here, and then you have that nice seasonality here. Is once we can get out of that September, October time frame, that's always a killer, okay? So because that was when they had the big crash, 87 crash, all this and all that. So what you want to do is just get out of that time frame, and then this is always a very good trade till the end of the year kind of a situation, and even like into a January situation. So what you can do is like in March, you can take a nice long here, basically to Memorial Day, and then really a lot of people go on vacation, they kind of lose interest a little bit. And then what you have is you'll have a nice good sideways action, but always look here at the end of October. Once we get that's always the bad time of the year. Then she has a nice good rip right on up. So let's take a look at the regular chart and see how it compares. Okay, here we have your Dow. Just a daily chart 1 year out. Okay, so you're actually here, you're ripping up here very, very nice. Now, again, what you want to do is this is that February period, just like it has on the seasonality. See how that comes right on down here? Okay, so this is what you want to look for, but this is what you want to look for, not to say, oh, this is bad. This is what you want to look for as a buying opportunity. Because what it does is then you just have a nice good rally here until the summer, but then look and see what happens here once you start getting into that October area. Look how nice this is where you have the rally keep on going up. Now, what you got here is you got basically a nosebleed section. So I just want to show you a couple of divergences. So when you look at this high and then you look on your RSI, see how high that is? Now, we look at where we are now, but look at your RSI here, okay? See, that's a negative divergence. It's just going to be a matter of time before this sells right off, and it's going to be right down in this level right here. Okay, so don't get complacent and say, hey, I got to take a pile of longs now. The trade is already done. You got to take this at the end of that October and just ride it right on in here till like into January once these earnings are past us here. But when I start seeing these negative divergences here, that is not really telling me something that says, hey, now I got to start getting long. Now, again, this could run up here for a little while here, another week or two or whatever, but just be very, very careful here with on the old Dow. So let's take a look here on a weekly chart. Okay, this is pretty clear. This is like a 2-year weekly here, but see this October time frame? See this, how you sell right off into that October. And then what you do is you have a really nice, good run. And then at the end of the year, okay, you just run right on up here. See this? Right on up here until that. But again, don't get too complacent with this here because again, when you look on that daily chart, you got that divergence there that you always want to keep your eye on. Okay, let's take a look here now at the S&P. All right, here we have the old S&P. Okay, so basically, you're pretty much like what you had on the Dow. All right, so you want to do is kind of run right up here. It could be in the middle of February here, but then you want to have a nice sell up. But this right here is your buying opportunity. Don't look at this as negative. I know sometimes it's hard to buy when something is selling off and it's at the bottom. But that's why you trade the charts. You say, wow, I look for something. I'm looking for double bottoms. I'm looking for gap fills. I'm looking for something, divergences, something that tells me, hey, I got to get long. All right, so when you look at this March time frame, you can see the S&P really does very, very well all the way in here till basically mid-January. Okay, then you have a little pop up here, which you can take a nice, good scalp ski. But realistically, this is a really nice, good buy and hold situation. But really, like right now, you want to wait for this pullback here, and this is where you want to buy it. And even at the beginning of the March, somewhere you can say, hey, this is a good buying opportunity. So let's take a look here at the actual chart. All right, here we have your S&P 1-year daily chart. See, here's that time frame. See how that works out? So it's holding up here. The chart is the same thing as the seasonality. Runs right on up here very, very nicely, but then you can see how she's slowing down here once you get to that September area. And then when you take the right on up here, this is that October. Okay, if you can get to end of September, October, again, this is also a good shorting opportunity here. So always keep that in mind if you like to short. But then you want to do is you want to have that buying opportunity, and then you just want to run that long all the way in here until you start getting into the first week of January, or even at the end of the week. But once these earnings are done, all these charts here are going to be trading the same. Okay, they just need a pullback. So when you look at this RSI here, what do we got? You got the same thing. See, you got a high on the RSI. You got a high there. Even higher here, but look at this RSI. See that? Negative divergence. So you always want to look at that the same way is going on your MACD. Now, your MACD tells you momentum. See, you got a high up here. You got it really high, but look where your MACD is. Okay? So this is already giving you a signal that says, hey, a matter of time, I got to get out of this market, or I got to maybe consider putting on some shorts here or something here on the trade. So let's take a look here on a weekly time frame. Now, I like to use weekly time frames because what they do is they give you a little bit outer look. Now, remember, if you're scalping, you want to use a tick chart, a 1, a 5, a 15 minutes. If you want to take that trade out a little bit longer, you can use an hourly and a 4-hour chart. But always look at a daily, a weekly, and a monthly. And you'll notice a lot of times when I post all three of those side by side. It gives you a bigger outlook of say, hey, where is this going to go? Because basically charts are just a roadmap of what's going on here. So here is this time frame when you come down in that October. And then you can see where you just have a nice, good, gradual run on up here till the end of the year. Now, this is really a good example here of where she came right on down. And then we just keep on rallying all the way on up here on your weekly chart. But again, you're in very, very over. See this is? See, the RSI is way over 70. You're in very good over bought conditions here. So this is what you got to be very, very careful of. Okay, let's take a look here at the old Nasdaq. All right, Nasdaq. Now, Nasdaq's one of my fave, okay, because it has all the good stuff in there, okay? So you have your Apple, your Amazon, your Netflix, your Meta, your Google, Microsoft, the whole nine. An easy way to trade the Nasdaq is with TQQQ, okay? That's an ETF. It's a leverage ETF. It's very, very easy. Now, you got to figure, when you look at TQQ, and I'll put it up on a chart, you could have bought TQQ a year ago at roughly 16.5 like I did. okay, is at 57 now. So when they're saying that, Meta did this and Google did this and that's, oh, you got to look at TQQ. Nothing could beat that. You're looking at over 200% here year over year. Okay, so let's take a look here at the old Nasdaq. So January, and then you can see the same thing. See, she rallies up here in that February time frame, and then it sells right off. So this is again your buying opportunity. Now Nasdaq is something you want to be in there, especially with that Mag 7. In fact, I call it the Mag 6.5 because Tesla, that's just not working. Okay, and now Elon Musk, he wants a check of 56 billion. I mean, are you out of your freaking mind? Who the hell gets a check for $56 billion? I mean, come on. I know he is Tesla, but you got to get a grip on reality. You take $56 billion out of Tesla on a basis, there's no money there. So you got to be very, very cautious here. So I call it the Mag 6.5. So anyway, here we have the old March area. So then you can see where it just rallies right on up here. But then you can see in September, it's that same thing again. You sell right on off, and then October is when you want to buy this, and then you just run that all the way back up here into the January time frame again. And then you can wait until mid-February here, and then she sells up. But always wait for this buying opportunity here. Don't get caught at the top. Get the buying opportunity, and then you can run it all the way on up. So let's take a look at the actual chart. All right, here we have Nasdaq, your actual chart. So you can see the same thing here. Okay, comes right down, sells right down. All right. So this is basically what you want to do is you want to run this, kind of get sell down, but sideways action. But again, you can see here at that end of that September area right here, that's when you want your buying opportunity going into the earnings. Now, the NASDAQ earnings, they all pretty much came out here. So, how much higher can this go? Like Meta, it ripped right on up there, Amazon, but you got a lot of good short squeeze. People weren't betting on what that is, okay? So you got a short squeeze, so always make sure that you know what that short squeeze is. So when you get a stock like Meta, just wait for that pullback. Be patient, wait for the pullback, buy it. You want to be in Meta, you want to be in Amazon, you want to be in Microsoft, you want to be in NVIDIA. I like the TQQ up on top of all that. That's an easy way to trade it. Right now, I'm a little bit lax on Apple and on Google. The other ones I think are way much better. Now, we'll look at here at your RSI. What do you see again? Okay. So you got your high. Then what do you got? You got a big high. What do you see? Lower high. See that negative divergence? This is telling you something. Look at this MACD. So you got a high. You got a big high. You got a lower high. See that negative divergence? This is your momentum indicator here. So always keep that in mind. This is telling you a story before this would happen to sell off here. Now, this can go up higher. Don't get me wrong. Okay, it can go up higher, but it's only going to go up there for so long before she's going to come down here in that mid-February, and then you take it long again. All right, let's take a look here on a weekly. All right, here we have the old weekly, kind of a pretty much the same situation here. There's your October, then she runs right on up nice. Now this is a pretty good example again, right here, your October, and then she runs very, very nice. However, you can make a lot of good money here once that comes down in that February range, have a nice good run all the way on up here. Okay, so always keep that in mind here, that run up, but always wait for that pullback, wait for a symbol. Okay, so like when this sold down here, see that candle? Then we put a higher low. This is a nice, what they call a tweezer bottom. That gives you a good run up. Now, when it ran up here, okay, then it pulled back, right? But then it went sideways. So you want to wait for that breakout of that candle. Once they break out on that candle, then look how nice she ripped up higher, okay? So what you want to do is read the charts. Always look for double bottoms, double tops, breakouts, candles, tweezer candles, anything that'll give you some kind of an advantage here to make the old cashola. All right, last one we're going to take a look at here is going to be the VIX. Okay, here we have the old VIX. All right, so what do we have here? You can see here, this is that end of February, and then it just rallies up. Now remember, this is going to do the opposite of what you actually have, okay? So here's that October time frame. So we can see the VIX is coming right on down because the market is going just the opposite. It's going right on up. September, you can see where that VIX is climbing, okay, because the market is going down. So it does just the opposite, but this gives you a good idea on the VIX here of exactly what is going on here. So you got to be very careful in these months here when you look at that February. Any kind of volatility like this is you got to be very, very careful because it's going to do the actually opposite of what the market is going to do. So let's take a look at the VIX on a regular chart. All right, here we have the VIX on your daily chart. Now you can see here in that time frame, that February time frame, you can see how it spikes, which takes that market down. Then as this comes on down, that way your market is rising on up here. Okay, so this is that area, that September area, where your this VIX rallies right on up. Okay, but that takes the market all the way on down. And then look at this. Look what happens here. Once we get that at the end of October, where you get everything going long again, as far as your Dow, your S&P, and your Nasdaq, then look what happens to the old VIX. Okay, sideways action. So realistically now, you have a trading channel on your VIX. So you have 1540 on the top and 1235 on the bottom. So I'm looking for this to spike up, and I'll give you a reason why. Look at this RSI. See, we have a high, higher high, higher high. Low, higher low, higher low. Very, very nice, which matches here. See this? You got that series of higher lows. That's exactly what you're looking for to make a bullish chart. So the key on this VIX here is you want to watch that 1540. Any spike above that will take that market all the way on down. So I know the VIX isn't, what it used to be, but I just keep my eye on it here. Just, what I'm saying, it's just another tool in the old box, okay? So, but always watch these patterns where you get a series of higher highs and higher lows, and it matches with that. See how nice that is? This is what you want to watch here. That gives you like in advance notice of saying, hey, if this pops out of that 1540, that market is going to come crashing all the way on down. Okay, that's what I got for you today. The crude oil, the natural gas, the gasoline, the Dow, the S&P, the Nasdaq, and the old VIX. Thanks for watching.